Thank you for staying with us. You're still watching Business Breakfast on iBrandTV. Now, let's bring you up to speed with happenings in the fixed income market. The overnight lending rate contracted by 83 basis points to 6.2% in the absence of any significant inflow into the system. Trading in the Treasury bill secondary market was bearish as the average yield expanded by 7 basis points to 3.9%. Across the curve, the average yield declined at the short end following buying interest in some bill but expanded at the mid and long segment. The average yield was unchanged at 4.4% in the open market operation segment. The Treasury bond secondary market traded with mixed sentiments, albeit with a bearish tilt. The average expanded by 1 basis point to 11.1%. Across the benchmark curve, the average yield expanded at the short end as investors sold off the January 2026 bond. The average yield closed flat at the long end. Now, let's understand this better. And of course, joining us is John Kanayo. He would be helping us better understand this. John Kanayo is the head research and strategist at Imperial Asset Managers Limited. Thank you for joining us, Mr. Kanayo.
You're welcome. Good morning, Bolani.
Now, give us a sense of activities in the market yesterday.
Oh, yes, thank you. System liquidity closed at 520.38 billion, higher than 463.39 billion recorded on Wednesday. As such, we saw across in the money market, we saw rates adjusting downward. Overnight lending rates was down by 83 basis points to settle at 6.17%. Open repo rate was down by 33 basis points to close at 6%. At the OMO market, as you pointed out, OMO market was flat. Average yield remains at 4.3%. Treasury bill market, we witnessed significant sell-off yesterday. Notwithstanding demand recorded on 14 July 2022 that had a decline in yield by 43 basis points. Across other maturities, we saw sell-off, especially on 8 September 2022, which witnessed appreciation of yield by 53 basis points. 10 November 2022 witnessed appreciation of yield by 44 basis points. Overall, average yield in this market was up by 11 basis points to settle at 3.9%. At the bond market was flat yesterday, though we saw sell-off at the short end of the curve because market participants decided to sell off 4 YTM that will be maturing January 2026. Average yield here was down by 15 basis points. Average yield on the short end of the curve was up by 4 basis points. At the mid end of the curve, market was flat. While at the long end of the curve, we saw demand. Demand came in for January 2042, that's the 20 YTM. Average yield was down by 5 basis points. Overall, in the long end of the market, average yield was down by 2 basis points. On balance of factor, you put across bond market, average yield closed flat, like I mentioned, to settle at 11.01%. This was the major activities that happened in the fixed income market yesterday.
Okay. Now, we saw the Naira depreciating by 0.1% to 419 Naira 50 kobo to the dollar at the investors and exporters window. Is there any update in the currency markets this morning?
In the currency market, the channel remains same. We structural challenge, supply issue challenge, The previous day, we saw appreciation by the same percentage that it dropped yesterday. That same appreciation has been wiped out yesterday. It closed at 419.50 kobo against US dollar. Like I continue to point out, this is supply issue challenge, and this is what CBN needs to handle with stride. I know that there are significant pressure due to demand, but obviously because of supply gap, that's why we've been seeing pressure in the foreign exchange market. Foreign reserve remain flat at 38.48 billion US dollar, and we can see that the buffer is big enough to support whatever CBN and the commercial banks are doing at the FX market. But unfortunately, we've been seeing this challenge coming from a supply side.
Okay, well, the average yield was unchanged, and you already mentioned that at 4.4% in the open market operation segment. But we also saw the Treasury bond secondary market trading with mixed sentiment, but with a bearish tilt, and the average expanded 1 basis point to 11.1%. Can you help us better understand what informed this, and what sentiment are likely to dominate the market this week?
Okay. Thank you so much for this question. At the Treasury market, if you look at fortnight ago, there was an auction, and like I printed out, that was on Tuesday. We saw spot rate across the three major maturities that CBN offered to the market going up compared to what we've been witnessing before. And for this very week, CBN has been quiet and has not been option. An option is scheduled to take place next week. What we can see is that market participants are anticipating that CBN is going to repeat what it did about 2 weeks ago, and what they have done is to start selling their position ahead of the auction that will happen next week, and that's why we saw bearish hits in the Treasury market. In the bond market, like I pointed out, market is gradually getting herself prepared ahead of the bond PMA that we hold on the 20th of June. If you look at the short end weakness sell-off, while at the long end of the curve, we saw marginal demand. Market is gradually preparing ahead of this PMA, expected to hold on the 20th of June.
All right, that's a fine place to leave it. Thank you for helping us better understand what happened at the fixed income and money market yesterday. Thank you so much, John Kanayo.
You're welcome, Bolani, and thank you for having me.
All right, have a good day.